Welcome to Stock Market Palantir. In this video, we'll be breaking down another stock analysis. Be sure to subscribe and drop your opinion in the comments. Okay, let's hear from our analysts.
You know, the current price action of Palantir Technologies, PLTR, it really embodies the most intense contradiction we're seeing in the tech sector right now. This profound divergence between its demonstrated operational strength and its market valuation.
It's acute, especially when you think about fiscal year 2025. I mean, the stock appreciated by over 135%. This is no longer trading like a software company. It's pricing in an outcome that is, well, almost otherworldly.
And we just saw that dynamic confirmed, just last week in early January 2026. The stock surged on those rumors of its involvement in U.S. military operations in Venezuela. It jumped 3.7% on January 5th, another 3.3% on the 6th. That's a tangible conflict beta right there.
Exactly. Which brings us to our central question, right? Is this extreme valuation justified by Palantir's operational superiority and its integral role in Western security, this whole sovereign AI premium? Or is the stock just demanding mathematical perfection that's simply unsustainable given the structural risks?
Well, my thesis is that the market is, for once, rationally recalibrating Palantir's value. I think this valuation is fundamentally sound because its operational excellence and its unique geopolitical necessity just defy traditional SaaS models.
And I respect the data that supports that view. I really do. But I come at it from a fundamentally different place. I acknowledge the impressive operational story, but I contend that the valuation is an unsustainable anomaly. It's fueled by sentiment and structural risks that demand, frankly, a severe discount for capital preservation.
See, I think the market has finally recognized that Palantir is no longer captive to standard SaaS metrics. The core justification for this premium is the quantifiable, demonstrable superiority of the underlying business.
Okay.
I mean, just look at the third quarter of fiscal year 2025. Palantir achieved what should be statistically impossible for a company this mature. A Rule of 40 score of 114%. That isn't just a high score. It combines 63% year-over-year revenue growth with a staggering 51% adjusted operating margin.
Right.
For a scaling enterprise that implies immense, almost frictionless operating leverage, it's an efficient market capture that completely defies the law of large numbers. It really suggests Palantir has crossed this critical threshold where incremental revenue costs almost nothing to deliver. It's a structural break. And that operational efficiency is matched by unparalleled customer stickiness. Their net dollar retention, NDR, is 134%. Just to be clear, that means existing customers are spending 34% more this year than last year. That figure is significantly higher than rivals like Snowflake at 125% or Datadog at 120%.
And that is a key number, I agree.
It's proof that the product is indispensable and that their boot camp sales strategy is just generating this deep viral growth. So this efficiency, combined with its unique geopolitical moat, it justifies its premium as an indispensable meme blue chip, a core Western AI asset.
I'm sorry, but I just don't buy that these phenomenal operational achievements can negate mathematical reality. Operational excellence, however elite it is, it cannot suspend the laws of finance indefinitely. When we look at the trading multiples, the picture it's frankly terrifying.
Go on.
The stock is trading at roughly 66 times trailing sales and an astonishing 400 times trailing earnings. To put that in context, that effectively doubles the median multiple we saw during the absolute peak froth of the 2021 SaaS bubble. We are pricing in a decade, maybe more, of flawless execution and continued 60+% growth. That is just not a strategy that's conducive to capital preservation. And beyond that, we have to pivot from financial metrics to structural stability. And that brings us to the iron cage of governance. The valuation has to be penalized for the near-total lack of shareholder democracy. The Class F founder voting trust held by Karp, Thiel, and Stephen Cohen, it ensures they retain 49.99999% of total voting power. To be perfectly clear, this means Class A shareholders, the people buying the stock, are politically impotent. We have no meaningful say. This creates immense key man risk that institutional investors have to discount.
Okay, but that governance structure isn't a weakness. Strategically, it's part of the moat, and the market is finally getting that. The very mechanism you're describing prevents two critical risks. First, hostile takeovers by foreign adversaries. Second, and this is increasingly relevant, it shields the mission from the internal corporate activism that plagues so many other Silicon Valley companies. The sovereign AI premium you're disputing is structural, not cyclical. Palantir is a national security imperative. The price action from last week confirmed it. That reliance ensures a highly reliable, sticky government revenue base that traditional software metrics just don't capture.
That's a compelling argument about the geopolitical moat, and I agree it is a powerful differentiator. But have you considered the cognitive dissonance coming from leadership itself? If the growth opportunity is truly, quote, otherworldly, as CEO Alex Karp has said, why are the insiders systematically and so aggressively reducing their personal economic exposure?
Well,
We saw it in late 2025, early 2026. Karp sold over $128 million in shares, Shyam Sankar liquidated $115 million, and yes, I know, much of this is done through automated 10b5-1 plans for taxes and liquidity. But the sheer scale of this selling, from the people who know the internal models best, it signals a potential disconnect. If $1 trillion valuation is truly imminent, why maintain an iron grip on political control, but actively shed personal financial risk?
I see why you would interpret that scale of selling as a bearish signal. But let's reframe the context. When massive multi-billion-dollar options packages vest, options from years ago, the tax obligations are staggering. The only way to manage that liability is through systematic, pre-planned sales. The remaining stakes are still vast. They are inextricably tied to the company's long-term success. Focusing on these necessary automated sales, I think it distracts from the structural strength.
I'm not so sure. And instead of that insider noise, let's shift to institutional hedging, which I believe signals a profound fragility beneath all the retail excitement. We need to analyze the subtle movements of smart money. Look at the dark pool activity. The off-exchange short volume ratio consistently hovers between 36% and 55%.
Okay.
This means on any given day, over a third to over half of all short volume is executed away from the public eye. This is institutional money actively managing risk. They are buying insurance against the massive retail hype we see on the public market. And what's more, the low days to cover, it's sitting between 1.0 and 1.34. That confirms there is no imminent short squeeze coming. It completely refutes a central bullish retail narrative. This indicates a deep-seated institutional distrust.
I can see that the high off-exchange short volume is a critical data point, I do. But let me give you a completely different perspective on the retail factor, which you characterize as just hype. The high retail ownership, estimated between 38 and 46%, that's not a structural flaw. It's a legitimate stabilizing force.
A stabilizing force?
Yes. This base, the dine-in hands on platforms like our Wall Street bets, they provide a high, robust, soft floor for the stock. Their sentiment score is consistently around 70 out of 100, which is extremely high. This ideological alignment, their understanding of Palantir's mission, means they are far less likely to sell during routine drawdowns. This is a sophisticated retail base. They get the ontology difference. They see Palantir as about decision-making, not just data storage. Their conviction dampens selling pressure. It acts as momentum fuel.
Okay, so that conviction brings us back to the ontology.
Exactly. The market has correctly repriced the fundamental difference between Palantir's approach and traditional data warehouses like Snowflake. Palantir's ontology is about mapping data to real-world objects to create a unified operating picture. Snowflake is still, primarily data plumbing. And we've seen this translate directly into market cap. Palantir is now nearly 6 times the size of Snowflake. The market is rewarding the application layer over the storage layer. And this is translating to commercial momentum. Look at U.S. commercial growth. It accelerated to 121% year over year in Q3 2025. That proves the ontology is rapidly penetrating the private sector.
That's an interesting point on the ontology. And yes, its government heritage gives it unmatched credibility. However, I would frame the competitive threat differently. I think the market is about to be fractured by a far more agile competitor, Databricks.
A Databricks?
Yes. While Palantir excels at the application layer and Snowflake at storage, Databricks offers a powerful middle ground, the data lakehouse. Databricks is already doing $3.7 billion in annual recurring revenue and maintaining 50% growth. The real threat is the anticipated 2026 Databricks IPO. Fund managers will be looking for a perceived cheaper, high-growth AI alternative to Palantir's 66x sales multiple. That IPO could siphon significant liquidity and momentum away from PLTR, putting substantial pressure on its already inflated valuation.
I'm just not convinced Databricks is an existential threat to the core Palantir business, specifically because of the depth of integration into national security. Databricks lacks the decade of trust, the security clearances, the track record. They can't dislodge Palantir from its government strongholds.
But the moat only protects the government side. That 121% growth you cited, the U.S. commercial side, is exactly where Databricks will compete on price and integration. That Rule of 40 score, as stellar as it is, will inevitably face pressure. Pricing in perfection at 400x earnings implies zero competitive erosion, which is just unrealistic.
So we must conclude with the structural reality. Palantir is a company that has strategically chosen to trade financial flexibility for operational permanence and geopolitical necessity. The 114% Rule of 40 performance shows the unit economics are unmatched, funding its unique mission. This combination, operational superiority and geopolitical necessity, justifies a valuation buffer that historical benchmarks simply cannot account for.
And to summarize my position, while I acknowledge the extraordinary operational efficiency, that 114% score is undeniably a stunning outlier, the price simply outstrips mathematical reality. The extreme valuation multiples, the lack of shareholder control, it all creates a risk profile that is fundamentally uninvestable for value-focused institutions. The staggering spread in analyst price targets, from RBC's $50 to Bank of America's $255, it just confirms that price discovery is profoundly broken.
It really presents us with a Palantir paradox. Operational excellence meets speculative fervor.
It does. The ultimate verdict remains a Rorschach test for investors. The continued validity of the bull case rests entirely on whether Palantir can maintain that incredibly high net dollar retention. That 134% has to hold above 120% sustainably.
And whether the high off-exchange short volume we discussed, that 36 to 55%, remains a purely institutional hedging tool, or if it transitions into major active selling pressure on the lit exchanges. The evidence for both sides of this narrative is robust, leaving the long-term status of this company to the confluence of geopolitical events and market psychology.
If you enjoyed this video and want to watch more analysis like this, don't forget to subscribe to the Stock Market Palantir channel. Thanks for watching, and see you in the next video.